I don't mind being on the side of an argument where very few others are.
Ooh. Hey friends, once a month Cathie Wood talks about the economy outlook, and I know it's hard to absorb macroeconomics, but her points are really good. I'll break down and I'll add my thoughts as I may not agree with everything Cathie Wood has to say. I've invested for so long, I've seen rotation between many different sectors. Money flow, it's simple. Money flows to the sectors with the least risk. So that's probably why there is so much money in bonds.
We still believe that there is a tug of war going on between value stocks and growth stocks.
In today's context, markets are deciding between growth and value stocks. So growth stocks are early stage companies with the potential to grow 2 times or 10 times. And value stocks are known as cyclical stocks like banks and utilities. Value stocks goes up when there are fears of inflation and rising interest rates. Growth stocks goes up when the opposite happens. The whole argument she's making in the entire video talks about good deflation which equals to rotation to growth stocks. I disagree because rotation is already here.
Interestingly, M2's growth rate has been unwinding since February.
M2 money in simple terms means all the cash in the economy, including deposits in the bank. Less M2 is good because less makes your dollar stronger. Your $1 can buy you more stuff. But you know what's free? Helping me click the like button. Thank you. Stay to the end of the video. I'll be revealing 2 stocks I'm considering a position.
Based on the employment reports we're going to get, if they are strong, tapering should start.
Tapering refers to central banks buying less. It's good. Overall consensus, even from the conservatives, to raise interest rates are pushed back to 2023. That's very good. So including M2 coming down, we are in a deflationary environment. Again, it's good for growth stocks.
The numbers were very good. The unemployment rate dropped by a lot, actually more than we normally see it drop in a strong recovery.
So unemployment is dropping, companies are hiring. It's a good sign. And she goes on talking about productivity today versus the 1970s.
Productivity growth will enable companies to raise wages, which without triggering cost push inflation, which turns into an inflationary spiral like we saw in the 70s.
In the 70s, there were crazy inflation, bad inflation. In the 70s, when the cost of goods shot up, companies had to pay more to buy more stuff. Staff wages had to go up, and one full circle, they sell more expensive. Today, innovation and productivity is driving the cost down. Automation, less workers, it's a digital world. Remember the days before Amazon, retail was expensive. So life is better today versus 30 years ago, generally speaking.
The more we learn about the strategy that traditional automakers adopted from a battery point of view, the more we believe that they're not going to be able to catch up to the likes of a Tesla.
So guys, what's the hardest part about making an electric car? Batteries. It's like Toyota asking Disneyland to make their engines. She believed that traditional auto is in big trouble. Most of them are outsourcing battery production. In my opinion, Tesla and BYD will lead the future of electric vehicles. BYD, though growing slower, both automakers are the only ones that are vertically integrated.
Capital may be flowing to our economy and other developed markets, and maybe other emerging markets from China.
Remember I mentioned about money flow. It flows to areas with less risk. I did a video covering my take on China and the risk. I'll link it up here and down below. So more capital is flowing back to US, and I'm happy. So wrapping up, Cathie doesn't think that inflation is a problem. She made so many pointers removing inflation fears, and growth stocks is coming back. For me, I look at the trend. Oil broke the uptrend, banks broke uptrend. Retail estate peaked a few months ago. I'm seeing some growth stocks breaking the downtrend, moving up. I think it's time. So guys, do you think that growth stocks are back in play? Do let me know your thoughts in the comments. I'm curious. Each video I spend about 1 to 2 hours replying and reading most comments. It's important to me to feel what you guys are thinking. And also thank you for your replies regarding my personal message from the previous video. So giving you guys a heads up, since I was talking about growth, I'm looking into 2 stocks now, Teladoc and Proterra. If I pull the trigger, it will be Twitter or here. I'll let you guys know. See you in a bit. Thanks for the thumbs up. Invest safely.